welcome to our Market of the Moment update for the week of December 5th, 2022. Michael Oldham and the Oldham team here with Chris Madrid, now with Caprock Home Loans.
Back again. Oh, you can say that. We'll stay here. Stocks, talking about the market, stocks are moving higher after a tough few days in the market, while mortgage-backed securities are lower, which we'll see here in just a second. Good news, though. Good news, which we're excited to share, especially the last like 6 months that we've had of just straight. I feel like being, like we've been kicked in the teeth as far as mortgage rates are concerned. But yeah, thankfully enough, man. I mean, the mortgage-backed securities are staying above the 100-day moving average, which we'll see here. We'll see here in just a second. But yeah, things excited. I think big things are ahead for mortgage rates in general, right? So in general, mortgage rates right now are down almost a full percent. So we were, I think there was a point in October where we were hovering in the 7.5 range, 7.25, 7.5, right? And as of right now, we're down 6.3 to about 6.6 on a 30-year fixed. So if you've got excellent credit, typically 740 and above, you're able to take advantage of a 6.3 to 6.6 interest rate right now. Obviously, there's different factors and stuff that play into that. But yes, great news. So yeah, so we're looking at the charts here. This is the last 6 months. All right, so we see where mortgage-backed securities were back in July, right? Now in July, rates were probably in the 5% range. So they had ticked up from where they were in February. But then we just see this massive, a continued decline and deterioration in mortgage rates. Obviously in October, like we were talking, there's a big a red candlestick right above that October on the left side, and there's another big one just to the right of it, like mid to late October. So since that point, that's really what we're seeing as the lowest point in mortgage-backed securities, the highest point in mortgage rates, right? Because those are related. So thankfully, we were waiting on the CPI report in November. That came out November 10th, I think was the date that came out. And the ultimately the reason that mortgage rates were moving up was because of inflation, right? So a lot of people say, well, the Fed had been increasing the federal funds rate, and that's why mortgage rates are up, and that's not correct. The reason that mortgage rates are up is because bonds, which we're looking at mortgage-backed securities here, but bonds hate inflation, and with inflation reaching 40-year highs, that's the reason that interest rates or mortgage rates have been as high as they've as high as they've been. So thankfully enough, if you want to go to the 3-month chart, so this is kind of just a zoom in of what we were just looking at. That November, so we see a November 14th date, just because they're doing weekly notations here on the bottom. But that November 10th, we see just a massive green candlestick, right? And that took us from below, we were below 99 basis points, and that took us to up over 100, which was just a really, really good news. We've been kind of watching and expecting. And what happened was that October's readings of inflation, right, which if those readings are always a 12-month reading. And essentially what happened is in November, that November reading that came out for October replaced last year's higher readings of July, August, September. So we actually there's another report coming out tomorrow, the PPI report, which we're hoping will continue to help mortgage-backed securities. The PPI is the producer price index inflation report, which is going to be released tomorrow. And we think there's a good chance that it makes for a little bit more action in mortgage-backed securities, and hopefully, we start to see rates kind of trickle back down. Trends, right? We're talking about current rates, so we're 6.3 to 6.6. We do feel like in the next 6 to 12 months, interest rates will move lower 6s, high 5s, right? And then, yeah, it's hard to say whether it's going to be, 6 months, 8 months, 12 months. But we do feel like interest rates are going to land somewhere in the 5% range, right? So low fives, which would be most likely our new lows. So that's a lot of, I get clients every day. Hey, let me know when rates are back down in the twos and threes, which I'm sure you do too, right? Like, hey, we'll talk when mortgage rates are back in the twos and threes. And the reality is the federal government was pumping billions of dollars into mortgage-backed securities, which they were keeping mortgage rates artificially low, right? Beginning of this year, they have started, we talked about this in videos past. They started to, well, one, they stopped purchasing mortgage-backed securities, right? So then essentially from a demand perspective, there just wasn't customer there buying, right? And essentially then we started to see prices move up. So it's like we've talked about before, simple economics. Inflation, right? Inflation is too many dollars chasing too few goods, right? That's just an easy way to explain inflation. So when the federal government is pumping billions of dollars into mortgage-backed securities, they're a buying customer, right? And they're buying above and beyond really what the market is putting out. So they're just artificially keeping rates low, which again, that won't happen again. Maybe I don't know, 10, 15, 20, who knows, right? It just that's not going to happen in the foreseeable future. So yeah, I think the new low, the new norm of mortgage rates here in the next 6 to 12 months maybe is going to be that 5% range.
And then you think that's probably going to trend out over the next several years as kind of our new normal, the fives versus obviously the threes and even twos.
Yeah, I think the twos, threes, and possibly even fours, right, are just a thing in the past.
Yeah.
So I think again, my crystal ball is not fully operational right now. But yeah, I think again, I think over the next 6 to 12 months, rates are going to be coming down. So should you wait, right, as a buyer? Should you wait to buy? I don't think you should. Yeah. No, I mean, here's the reality, right? Is we saw, which this will kind of segue into probably what you're going to talk about, but
yeah,
we saw a slowdown in housing, mainly due to higher interest rates, right? So a lot of buyers either couldn't qualify because maybe they were in the summer they were barely qualifying at a 5% range. Well, qualifying at a much higher 7 or 7.5% range, that just from an affordability standpoint, that kind of eliminates a lot of buyers. Now, what's going to happen when rates come back down to the 5% range, right? We're going to have kind of an influx of buyers again. So if you want to beat the multiple offers, if you want to beat the feeding frenzy, which I think we're going to see that again, because again, the inventory shortage has not been fixed, right?
Yeah, we're going to see
in the last 2 or 3 months, builders haven't magically built a million additional homes, right? Which so that's talking about the market in general, the inventory issue, which is really what's caused the home prices to go up and all that stuff, is just because inventory has been way down, and there's no builders don't have any intention of overbuilding at this point, right? Say and encourage buyers enough. I mean, it's really a really good time to buy. If you have questions related to the 2-1 buy down and really how that can even help you with a possible refinance next year when interest rates go lower, move lower, right? Give me a call. I'm happy to kind of talk you through that and walk you through that, because it's a really, really good time to take advantage of slightly lower rates and lower home prices right at the end of the day. So
yeah. All right. Want to get in touch with Amy or I for your real estate needs, it's 469-369-0873. We'll get you in touch with Chris on the financing and lending side at 214-734-1531. With that, we're going to wrap up